9 to noon. The Secret Workday of Uber Wealthy Americans by John Wooten. For the student, friend, and classmate who showed me it was all worth it. Thank you, Jake Crapster. For the invaluable help editing. Thank you, Lydia Adams, Gus Beaumont, Brittany Blitzstein, Tristan Bogus, Jenna Carter, Ryan Creel, Hannah Gorski, Lucas Holson, Jenna Johnson, Jacob King, Willie Lung, Kenny Long, Anthony Love, Caroline McPhee, Emma McElroy, Alvin Mutongi, Ashley Behan, Jack Badowski, Kaylee Queen, Kaylee Stiles, Christian Sturt, Annie Thomas, Joseph Wessler, Davis Wilder, Kaylee Zeller. Published on January 28th, 2019, in association with Amazon. This book has been one of the most difficult projects I've worked on in my life. I see it as a transformative work from my childhood to adulthood, and I hope it will inspire financial change in many brilliant minds. Sale of this book without a front cover may be unauthorized. If this book is coverless, neither the author nor the publisher have received payment for it. For all the painstaking, 30-hour school weekends and writing-filled breaks that went into this book, I implore you to support the work's official release. Thank you. Copyright John F. Wooten IV, all rights reserved. Full disclaimer at the end of the book. ISBN. Yeah. Table of contents. Preface. The day. Starting to get there. Why should I trade stocks? Fundamentals. Following the rules to wealth. Retirement funds and taxes. College. Do your taxes. A quick note on debt. Discovering the stock market. Reading stock charts. Bulls, bears, and shares. News and principles. Selling short. Breaking down key statistics. Long-term, low management investing. ETFs and mutual funds. Commodities and currencies. Order types. Active trader status. Options. Bonds and interest rates. Technical analysis. Charts expanded. Drawing of charts. Trend lines. Triangles and wedges. Consolidation and flags. The ABCD setup. Head and shoulders setup. Candlestick setups. Moving averages and MACD. RSI, stochastics, and Bollinger Bands. VWAP and circuit breakers. Combining trend lines and indicators. Diversification. Stock screeners. Brokers. The mentality. J. Wooten. Acknowledgements. We're excited. Preface. This book is intended to give anyone a solid grasp on their financial future. Working 9 to noon is ludicrously profitable, but is not for everyone. However, you deserve to retire with as much money as you want. You deserve to grow your savings as much as you want. You can be the captain of your own financial future by using the knowledge and everyday techniques of the uber wealthy. America is a powerful economic machine that gives a huge tailwind to any equity investor. Take advantage of it. This book starts by going through the workday that so few truly master, the workday that opens the floodgates holding back unimaginable opportunities. Then, you learn about the basic techniques and tougher technicals behind long-term investing. Assuming you are a novice student in the markets, you will learn about different account types, and principles of managing your assets to build real savings and retirements with fundamental analysis factors. In Part 2, you will dive into patterns, setups, indicators, and everything else you can use to master active trading and strengthen your long-term trading by identifying and profiting from repetitive, high-probability profit strategies. By the end of this book, you'll ask yourself why you ever thought of hiring a financial advisor. The stock market makes so much sense to you. I truly hope this book inspires a few people to embrace the 9 to noon workday from out of their current wealth. Enjoy. John F. Wooten, of course. Chapter 1. The Day. It is 9 in the morning. You sit down. You do not know what the approaching trading day has in store, but you are ready to tackle anything the market throws at you. You're not in an office building. You're not on Wall Street. You're not even fully dressed. But none of that matters. You sit at your computer this morning, eager to work, because you want to reap the rewards. You work from anywhere with an internet connection, linking you directly into the greatest financial market this world has ever seen. First things first, pre-market screeners. You scan through 20 gapping stocks as quickly as you can. You carefully analyze volume, price, range, and percent change on the fly. Tickers fly down your screen as you pick your favorite movers. Everything you see has crossed your eyes 1,000 times before. 15% gainer, 24% gainer, 62% gainer. With that volume, is that tops? You see all the same things over and over every day, but somehow it is always different. You never remember the tickers that never stay around, yet you always come back to find more. The potential is here, and you can see it. 9:05. You get your favorite movers up on the charts. Each stock needs to be decoded. You zoom out, looking at both the last week and years into the past. You find a double top resistance, a short-term trend line, a head and shoulders setup from last year. Great news. You know that these price levels will be high tension points for the movement today, and you draw them on your chart accordingly. Next, you zoom back into the real game, the short term. You drew your horizontal support, you drew your historical support and resistance line, and now you have a better idea of where this stock can soar. 9:10. You grab another preferred stock off the screener and repeat. It is all about opportunity. You do not know what today's biggest mover will be, but you do know that everything happens quickly in this game. You type the ticker in a chart and look for historical resistance levels. These might be your sell targets today if the stock can manage to go high enough. You know that your early price outlining will pay off in today's rapid trading by giving you a slight edge over everyone else, an edge that tells you when to sell and when they hold into a pullback. 9:15. You keep charting long-term price levels for all the stocks that you like on your pre-market gainers screener. As long as you see volume to support a trade intraday, you see the need to mark historical price levels. There are different movers every morning, and you have to chart every day to stay on top of the game. Everything moves once we hit the bell. 9:25. You finish marketing supports and resistances for all your favorite pre-market gainers, and you know you've done the best you can with what you have. If anything had a serious run-up before this morning, you know about it. Now, you move on to catalysts. Starting with your most promising picks, you run a quick news scan to see if anything could really shoot the stock price up today. You look for anything that could bring the stock price climbing today, and then you see it. FDA approvals, new patents, stellar earnings, new executives. You never care what the news is because you look at everything the same. If anything brings others to the stock, then you are happy to cut them into the game. Higher volume means even more attention, liquidity, and implied volatility, and you wake up every morning for those three. 9:28. You refresh all your screeners and look for any new last-second movers you may have glanced over earlier. If you find any, you draw in historical price levels and hope to see the stock approach them. You play everything off the charts. Candlesticks are your portal into the game. You make sure that when you go into today's market with the best information you can find. Your 12 different charts are simultaneously polling market backends, begging to see today's first candle. You know that the floodgates are about to open and you are almost ready. 9:29. You pre-fill your order boxes with the number of shares needed to make up your intended average position cash sizes. You never thought you could punch numbers into a calculator this quickly before, but you know that everything needs to be perfect when you hear 9:30. Ding, ding, ding! The sound never gets old. Every time you hear the opening bell, you know the American economy is open for business. Pre-market orders flood the world's largest exchanges faster than you can push send on your market buy. Everything starts moving, and it's finally time to start trading. You know that the next half hour is the most volatile time in the market, and you are instantly ready to cash in on its movement. The first thing you do is watch for quick price action in the stocks you have identified. You jump into short-term swings to catch some early market momentum. If you see a setup, you go straight to your principles. You use technical analysis to enter a position. You have no bias for any one stock. You condition yourself to buy and sell based on facts. You avoid low-volume trades without substantial upside. You only trade cheap stocks with reasonable volatility. You always sell when you have profits with no backbone. You stick to hard stop losses to mitigate risk. You are never stuck on one stock. You only use market orders in a fast-moving market. You play everything off the charts. Your principles develop as you trade and always cater to your specific style. They keep you disciplined, taking smart profits and cutting losses quickly. You know the patterns and breakouts that you trade, and you only take trades you can predict. 9:45. Time is a blur, sitting idly between the excitement, pressure, and dopamine embedded in this morning's early trades. You have made your quickest trades for the day. If anything was going to pop rapidly from pre-market activity, it has. You follow the gainers for the day in hopes of a continuation of momentum. You follow the gainers for the day. If you're still in any positions, you continue because they look promising. You start calculating how long it is safe to stay in before exiting with profits. You move your stop losses according to how confident you are in positive movement. You understand the risk and price levels and watch out for in your positions. If you are not actively in more than 2 or 3 trades, you pull up your live scanners to find any new stocks collecting momentum and making new highs for the day. You are always ready to find new opportunities and quickly analyze new movers. 10 o'clock. You continue watching for setups in the day's leading stocks. You analyze the movements in the long list of stocks on your screen and quickly weed out bad picks. You pull up the rest on different charts until you find a good setup to trade. You never forget early movers in the day that might have possible setups later on. You carefully and calculatedly split your limited attention between it all. Open positions, possible setups, order boxes, order size, unfilled positions, both old and newly formed, trendline patterns, indicator movement, new gainers on the screener, catalysts for intraday movement, drawing and analyzing support and resistance levels. The pressure is on by 10 because you're either looking to make big gains after a slow open or trying to close out your massive profits for the day before morning volatility fades away. 10:15. You listen to the markets and see how quickly everything is moving. You pounce on stocks with the most volume and lowest spreads as soon as you see great setups. You never hesitate to submit an order when you see a surefire trade, but you also never forget to consider the downside. You know that you will be fine as long as you keep your winners large and your losers small. 10:45. By this time, most of your biggest trades have gone through. You're looking to make a little off quick setups here and there when the market presents them to you. You might start running through the most popular stocks for the day one last time to spot any last-minute breakouts or continuations. You treat any open positions normally and sell at your sell targets or adapt to new prices if necessary. You look for any closing trades to end your active session. 11 o'clock. You start to finish your active trading and begin closing out all your positions. This morning was energetic and swift. You look at what you could from the markets. You took what you could from the markets or gave some back. You never hold anything past the close and rarely see setups as you near lunchtime. It is time to move on a long-term portfolio management. The first thing you do is check to see how your long-term portfolio performed this morning. You compare your percentage change to that of the 3 major American indices. Your long-term portfolio goal is to beat all 3 indices every day. You know that you will have extremely strong long-term growth if your picks can consistently beat the average market return. If any of your positions have large movements, you look at those first. You are continually analyzing the long-term potential in all of your picks and potential picks. After reading up on larger daily catalysts such as big news, you take one more look over your actual portfolio. You also check the progress of any swing trades that you might want to exit. You want to make sure that everything you own is performing, give or take how you expect it to. 11:15. Once you are totally done with morning active trading, you start looking at potential stocks to add to your long-term portfolio. You stick with your standard research and go over your potential buys watch list. You perform some technical analysis on a few promising picks. If you see something you like and have been watching for a while take a significant drop, you may put it in order in for it. You're always ready to reinvest dividends and profit because you know that reinvesting compounding gains is the quickest way to grow your account. If your portfolio does not stack up to the average market return in the long run, you analyze the factors behind your underperformance and consider ways to rebalance your portfolio to accelerate growth. Additionally, you spend this time to consider how diversified you are between independent markets as you constantly strive to diversify your holdings. 11:45. At this point, you've looked at a few long-term stocks that you own or may soon own. You have thought about the potential in the companies and weighted the technicals and public perceptions to come up with an opinion about the stock the stocks at their current price levels. If you like a position, you enter it when you see a good opportunity or with an average cost spread over a longer time period. 11:50. You look for larger companies that moved a lot today. You see what made the market move on a greater scale and consider the economic implications for your portfolio. You also add any stocks you learn about and like to a watch list for the future. 11:15. Near the end of the morning, you acknowledge your gains for the day and make sure all your orders settled with your broker. You check for any open orders and close out of all your trading software. You shut down your scanners and finish any last-minute long-term analysis. Noon. You enjoy a well-deserved lunch.